Hey traders, David Frost, LazyGapTrader.com. In this video, we're talking about day trading. More specifically, we're talking about gap trading and how gap trading is by far the single most consistent and profitable day trading strategy you can find across the markets today. I do a couple of things. The first one is I teach a course where traders learn two specific gap trading strategies. The first one is known as the morning gap trades. This is where stocks that are gapping higher or lower at the open, generally from either an earnings announcement or some other related news event. When stocks are gapping higher or lower, it creates an opportunity for traders. The opportunity is for traders that can identify a specific price where stocks will first be drawn to like a magnet, and secondly, have a price reaction from in the other direction. We definitely had some positive and profitable gap trades today. We're going to take a look at those in a minute. But the second thing I do is give traders an opportunity to get my gap trade sent to them at 9 o'clock in the morning Eastern Standard Time, 30 minutes before the markets even opened for business. Here's a copy of the email that went out this morning, and as you can see, it was a little early today, came at 8:53 a.m. Eastern Standard Time, and this morning we had 7 potential gap trades on the board. Now typically, they're not all going to hit their specific price targets. However, what we're doing is we're identifying the specific price target that we're willing to take a trade at. These are the highest probability trades on the board. If a stock does not come in to the only level that we're willing to make a trade at, it's off the board, it becomes a no trade. We only want the highest probability trades we can find. Out of this list, 2 stocks hit their specific price target that traders who have taken the course know how to calculate for themselves. Traders will come up with the same exact price levels because everything they need to know is taught in the course. How to trade the gaps successfully, which stocks to play, how to calculate the price levels, how to calculate the profit and the stop loss targets, and that's just scratching the surface. There's a whole lot more. So out of this list, the first one we're going to look at is Smucker, SJM. Gap lower, support levels are $109.29, and I gave a secondary price target lower in case the stock traded lower. Stop and profit target is about 50 to 90 cents. These are minimum profit targets, and in the course, I teach traders how to turn trades like this into a risk-free, emotionless trade, being able to squeeze more out of the trade when and if these stocks trade higher. The second one that hit its price target today was Signet Jewelers, SIG, gap higher. Resistance levels are $63.58, and then I also gave a secondary level if the stock was to trade higher. Stop and profit target is about 35 to 60 cents. Once again, minimum profit targets. A couple of the other ones came close to their levels, but they didn't hit the target, so we leave them alone. However, the bottom one, Michaels Companies, MIK, you see where I say gap higher, resistance levels are 24.31 and 25.98, and then I give the stop and profit target. Well, Michaels came within 6 cents of the 24.31 and collapsed lower. It's a bit of a heartbreaker, but sometimes that's how the cookie crumbles. We had a little case of the front runners on this one, so some folks jumped in the short side ahead of the game, and the price never got to the target. That's okay, it happens sometimes, but you can see the power of these levels. I'll show you Michaels at the end of the video. The first one we'll look at is SJM. You can see where the stock closed yesterday, up at $118.79, getting a pretty good haircut at the open. We identified a level down at $109.29 where the stock should first be drawn to and then have a price reaction from in the other direction. As you can see, the stock came into the level, pierced through by a little bit, making a low of 108.60 within our stop loss limitation. And let me just move this chart over slightly. Okay, so you can see here where the stock made a high of $111.25 just minutes later after reaching the price target. That represents almost a $2 price reaction in the other direction. For a scalp trade or a day trade, who doesn't want that kind of profit very quickly and very painlessly? The next one we'll look at is Signet Jewelers, and you can see here where the stock closed yesterday below $52 a share, getting a tremendous rip higher, and we were able to identify the $63.58 level where the price should first be drawn to like a magnet and then have a price reaction from in the other direction. You can see where the stock traded up to that level, pulled back. The first pullback gave us a low of $62.50, so that was almost $1 gain on the first pullback. Then the stock traded up to that level once again, and what this goes to show you is the power of these price levels. And once again, the price was rejected at that level, and the stock continues to trade lower. So this was a short trade at $63.58, right at a very, very strong resistance point that we were able to identify a half an hour before the market even opened for business. Folks, we do this each and every day. Some days we have one trade, some days we have two trades, some days we get 5 or 6 trades. You never know exactly what the market's going to give us each and every day. Here's the heartbreaker. Remember the level from the email of Michael's companies, $24.31. You can see what happened. The stock ran all the way up, made a high of $24.24, and then collapsed back down. That's a tremendous pullback in Michael's in just a matter of minutes. Unfortunately, it missed our level by a few pennies. That happens. That's the way the market works sometimes. However, it does still show you the power of these price levels that traders learn how to calculate in the course at Lazy Gap Trader. After all, how many traders do you know that can identify a price where a stock is going to have an immediate reaction in the other direction while a stock is either up or down 5, 10, 15, even 20% right at the opening bell, and we can identify where this stock should have a reaction in the other direction? These are the things that traders learn in the course at Lazy Gap Trader, and they're also the things that they can use for the rest of their trading career each and every day. If you want to learn how to do this, come over to Lazy Gap Trader and you'll learn everything you need to know in order to be successful trading the gaps. I'm David Frost. Thanks for tuning in, folks.